Thank you very much for the invitation. Good morning, everyone. Allow me to go a little bit deeper on the sustainable finance issues, and especially how the sustainable finance is impacting the ship finance per se. And I would like to build upon actually on the presentation of Dr. Galanis about the EU taxonomy. A key point, about the sustainable finance is that, of course, all you know that greening is a statutory requirement. Owners must comply. There is no difference than in any previous MARPOL or environmental regulation. It's a knockout criterion. Either you comply or not, as simple as that. But there is a big difference. The allocation of the funds internally in the bank, in the financial institution, is shifting from the yield to the carbon footprint. That means, and this is something that really changes the map in the financial world, that means that when the ship finance department asks, let's say, for, 10, 20 millions for a project, the Treasury will not reply based only on the yield of the project, but also on the carbon footprint. Why? Because, as per the EU taxonomy and the other regulations, the bank has, or the financial institution in general, has to report back the environmental footprint of the financial institution. That means that if you're not green, then I'm not going to be green. So, of course, the ship finance department might have an interest to sell the money to the industry, but on the other hand, the Treasury might face specific limitations. So, in my view, it's a great opportunity. It's a great opportunity. Why? Because you can diversify your tonnage and your service. Of course, by reducing the consumption or by increasing the efficiency, you can gain from, let's say, carbon trading or other carbon schemes, let's say, that come into the picture. And of course, to attract investors, a new investor base through efficient ESG, let's say, policies and patterns. It was mentioned about the Poseidon principles. The Poseidon principles is nothing else but a private agreement. It's an agreement among financial institutions, mainly active in the ship finance, let's say one of the top financiers, 35% as per my calculations. However, there is a very interesting part here. In the credit filtering, let's say the credit risk, whatever you call it, approach, the IMO regulation of CII and EIR become an integral part. That means that the banks say, hey, we are not experts in greening. What we do is that we follow the IMO rules, CII, AR, and this is what we get in our books, and this is how we are going to monitor the environmental performance. But this is, let's say, the interesting part. Because, of course, we have the principles, the assessment, the accountability, enforcement, transparency, blah, 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 everything is there. However, the important point is this trajectory. This trajectory says what? The trajectory says that I have a portfolio of ships right now, and if CII says -2% or IMO comes up tomorrow with -5% environmental footprint, then my portfolio has to follow this trajectory. That means that not only you individually, but also my portfolio in an aggregate should, let's say, comply with these rules. And this is, let's say, a very interesting development. Along with that, I personally agree with Mr. Galanis about the EU taxonomy. The EU taxonomy is a directive, is a regulation that applies to financial institutions. It is not, let's say, shipping oriented. It's not, let's say, sector oriented. It's an umbrella. It is an umbrella rule, and that's an umbrella rule says what? That the financial institutions, that means banks, funds, everyone who is actually selling money, professional investors, they have to comply with this taxonomy. And the taxonomy, of course, it's a huge document, it's complicated, but it is, let's say, quite simple, because what you have here, you need to have environmentally sustainable activities, you have to have specific environmental objectives, and you have to follow some screening criteria. That means that your project will not only be evaluated from the ship finance department, it will be evaluated from other departments of the bank or the financial institutions, or has to comply with these environmental approaches and should comply to all of this. That means also that what we consider, and this is quite interesting, as green should also comply with the screening criteria, and these are science-based criteria. These are not, let's say, arbitrarily or subjectively taken criteria, what I like, what I do not like. There are some rules. Are these rules, or let's say the regulation, perfect? No, by no means no. Is as a regulation evolving? Absolutely. But what does it mean for shipping? Shipping means practically that everything that we do in shipping, retrofits, new building, operation, blah, 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 it is eligible. That means that practically everything is there. Inland waterways, you name it, deep sea shipping, everything. However, so far, there is a very clear, let's say, we can call it ban, or you can say exemption, you can call it whatever you like, that ships that are engaged in fossil fuel trade or transport are not subject of this regulation. That means crude oil carriers, for example, are not. At the same time, for example, cruise ships or large yachts, they are not part of the regulation. Is there political pressure, is political debate in Brussels to include, let's say, cruise ships in the taxonomy? Yes, it is. However, this is just an example to see that the regulation for the financial institution is also evolving to the direction of stricter environmental compliance. So, to cut a very long story short, in my view, there are opportunity and threats, of course, as all of you can assess. One of the major threats is the moving goalpost. So regulation that was originally considered in 2028 for container ships has moved, let's say, to 2027. That would be very difficult for the financiers and the project originators to discuss. We might have new pollutants. We might have, let's say, alternative fuels and uncertainty. We have discussed about all of this. We have myopic attitude. I mean, this is something that at least we get very often. Let the others begin. Let the others be the pioneers, not us. ESG as a whole is not only about the environment, it's not only the E part, the environmental, you have also the societal, you have also the governance. It is more complicated than you think, and trust me, in the next years, the financial institutions will focus more on ESG because they have also to report back the ESG, let's say, performance of their financial institution as per the ESG directive, blah, blah, blah. And what is, let's say, another issue, the data collection. No digital solution, no chain of trust. This is very, very important. In my view, there are also some unexpected opportunities. For example, the voluntary carbon markets. Allow me to tell you that many shipping companies are already exploring the voluntary carbon markets, and many companies are already, let's say, at least trying to start learning all these issues of the trade and et cetera, et cetera. We might have an energy mix that is, let's say, a new reality. That's very important. So we are going to have a new equilibrium in this energy mix. We have the digital means, of course, as I said, and as I said, allocation as per carbon intensity. That means that in most cases right now, what you discuss with your bank is the margin, the daily margin of the project in terms of money. But pretty soon, if not already, many banks will also discuss how many tons per, I don't know, ton mile or whatever. This is, let's say, part of the new reality. So, failing to comply. If you fail to comply, no money. As simple as that. Especially to institutions that are subject of the EU taxonomy. And there are clear indications that other financial institutions, for example, Chinese or American, US-based, they comply not because they must, but because they can see better performance, financial performance of the assets in their portfolio. That means that greener assets, they have a better future. And this is also part of the depreciation, the aftermarket value, etc. of the asset. Can you follow, let's say, a minimum compliance strategy? Yes, you can. Can you follow a maximum compliance? Yes, you can. I mean, all of it is possible. It depends on what is, let's say, the tier of clients you would like to serve. Second tier, third tier, first tier, whatever you call it, all of it is part of your strategy. A last point as a recap from my side, because I can see that I only have less than 20 seconds. Decarbonization is not only high in the agenda, it is, let's say, the key driver. And Poseidon principles the EU taxonomy is just the first step towards real sustainable financing. The only point that I think that would really change the map is the price of carbon. What is really the price of carbon? Because this price is not so easy to estimate for the moment in the financial plan, and therefore it's not so easy to make the risk assessment in the plans. I hope that I managed to stay within the time, and if you have any questions,